All right, everybody. Today is Friday the 13th, an ominous Friday here in the US of A. It's the 14th for my guest now. It's the Godfather is joining us. We're going to be going through some things. Crypto. Stream looks like it's coming in good. Let me just check a few more things. You want to introduce yourself?
I mean, I wouldn't really know what to say.
Say what's up.
Yeah, that would have been a good opener. Ooh.
Nice.
Ugh.
And you're sharing your screen. Perfect.
Okay. Quality coming through good.
Yeah, let me just end my stream. Pop this over here. Well enough. Yeah, it's actually coming in pretty good. Your resolution's really small.
It could be 1 second.
Um,
I'll fix that up.
it's your native resolution of your monitor.
Yeah, I'll make it zoom in a bit. Better?
Yeah, that's much better.
Alright.
All right, and we're live. Go ahead and take it away, my dude.
Alrighty. So we currently have a ridiculous amount of strength to our trend. I'll just go over a couple examples of why this can be a very strong trend indication. So, for instance, let's drag this up. This is daily BTC of since March. Last time we had a nice, good, strong buy signal. Was from here down to about here. Because we had a pretty big price, a larger lower low, and then we had RSI while in oversold levels, forming a divergence, showing that we got pretty strong seller exhaustion and buyers are stepping in aggressively. When I'm looking for larger trend pitches, stronger, larger trend pitches, I like to use the RSI 14, just because it's based off the past 14 candles, where par, we have it set to past 5 candles, which is very useful and helpful for, since it's more sensitive and fluctuates a lot more often, you're able to trade more effectively in when the market is chopping. Like in this instance here, or like this instance here, you would have been able to get quite a lot of good trades in. But we're looking at the daily time frame there. I'll give a better example. We'll go to the 1 hour. Where was that? So yeah, in this kind of large sideways action, which lasted quite a while. This was when we first tapped into 47,000, 49. Probably different per exchange, but we're looking at the all-time history, BTC history index here. So PAR's very good due to the extra sensitivity in trading in a ranging market. So once we started to range sideways here, you can see, say, I hope you would have taken a long down here, but say you took a long down there and you just like probably would have taken an exit out up here, just because we're sitting into Where's my bar? Almost. I sent at the bottom. I know people usually like to be drawing their fair value gaps, which would have been, you know, something like this, wick to wick, big gap. That's such a significantly large area. I prefer to generally draw from, like, if we're below and we trended hard below, if we are indeed very, very bearish, you should see some form of initial strong reaction off this bottom wick right here. So we drag that across and join it up to here or here. I usually prefer to go here, and then the next area I would be looking at would be up to here. So we'll go here to here and drag it across. As you can see, we came up, we kept rejecting, but we had a significant buyback down here. So this is not particularly too great of a deal in area for me personally with how I trade following the trend. And I'm not as confident shorting as I am longing, especially because I know that we are in a bull market. So you definitely could have been looking for strong rejections out of this zone, which we did actually get right here. We printed 2 dojis. There wasn't really an indication on par on the 1 hour time frame to be taking a trade there, but safe bet, probably would have had a stop up here, drop it down, would be looking into this area here, because this is definitely an area right here where you could have some potential continuation coming through, because we had quite a bit of price action traded through this sort of range, but generally it doesn't retrace back through to the first level. It likes to go a little bit further, because a lot of people are probably looking at this spot right here. Now, we had quite a bit of trading going on in here, and then we traded above, we fell back down, traded back up, and then we had a pretty nice rejection off there. So a lot of people are probably looking right here to be for a support level. But you definitely could have taken a trade here. You would have either taken profit, or you would have let yourself get stopped out after it came back down. Bear in mind, I've gotten completely sidetracked from where I was originally going at the start of this. So anyway, I'll talk about par later. We were on the topic of strong trend changes.
Let's look at like current price action with this recent move.
Okay, so with this, I'm on 2-day here. Whoops. Okay, so with this recent move, we have a bottom forming here off our closes. We do have a divergence here, because we got our pivot points on RSI, and this is now confirmed. The divergences on RSI are, you know, they'll print them for you, but they won't print every single one for you. Price didn't really make much of a lower low. We could pretty much just say, like, there was a double bottom right there. Um, but we have RSI giving us a higher second peak or second low. So there was a pretty decent amount of buying interest down through this area. So this is a divergence, generally weaker. We are on the daily time frame, but what gave me more strength to this when which I did post in the signals section was the fact that this price action from pivot to pivot, 32 days worth of price action. That's a very large amount of time for price to be trading in. The previous divergence that I'd gotten on BTC back in July was from here to here, here to here. This was a very good one. We had a large divergence, like a large lower low on price, and we also had a higher low on the RSI. Mind you, it's on the 14 RSI, so it takes in more candles to account, giving you a stronger indication. We could always step this up to 28-day RSI or something like that and look for an even stronger indication. But I prefer the 14. So this was in extreme oversold levels. So there is a massive shift in buying pressure. Just look at that angle on price there. Huge. And a lot of the market was still the general sentiment from the market, from my understanding of being in other groups and looking around on Twitter and whatnot, and also gauging my workmates who are in crypto, gauging their expectations and whatnot. Everyone was still very bullish all the way through here. Still. And it was sort of in the last week or two before this move that people had all of a sudden started to flip bearish, and I started seeing people talking about, we're coming to 44k, we're coming down to right here, 44, no.
That's my 50k 52k projection.
You know, this zone here.
That's the realistic range.
Yeah, that's the realistic range. Every single person was begging, screaming, we're heading here, and we're all bullish all the way through here. Get down to around here, and everyone's just fear. It's just hit maximum levels. We got news coming out that's bad. Not like analytics wise or economic wise or anything like that. Just Cointelegraph, typical places that are posting about crypto. The places that you see are like expert analyst predicts XRP to be $1,400, you know, by end of 2025 or whatever, and it's like, okay, sure.
I never trust reports like that.
Yeah, nah, never.
Even BITI, like even Bitcoin, like
nah, I don't.
Analysts that project prices that go beyond historic levels and price discovery, I'm like, I have a lot of reservations about where those targets are.
Yeah, for one, it's gonna be very fucking hard to discover, to gauge and predict where Bitcoin can go in price discovery or overall like larger retracements. I mean, in a bear market, you know, you can make a better gauge, like from our top up here, you could make a better gauge of generally, you know, it would retrace somewhere to previous all-time highs, find a support there or whatever. That's much easier in a bear market, but when like you're still in a bull market, that's going to be a lot harder to sort of gauge. So everyone's bullish all the way through here, and then I noticed that people started flipping bearish around like this price range. I started seeing people talk about 47, 45k, and then when we got down here, another group that I was in that I had to leave because I shared my insights with them, and I'm like, I definitely do not think that we are reaching there, at least at not this point. I'm like, I think we should all be long. And they essentially like tried to clown on me, call me an idiot for being long, and they're all like, it's programmed. We're going 44, 40k. We're going to the next support. So anyway, I left there. And my reason for being so bullish at that time was the fact that I'd seen this beautiful divergence on BTC's price, and divergences, they show a potential reversal of trend. You can have one form and then you can come up, but you can also just drill it straight back down. But Bitcoin, last time Bitcoin had made a bullish divergence on the daily time frame around oversold levels was here, while we were at $25,000. And that was a nasty one. That absolutely ripped us upwards. And then we have another one over here, not particularly something I would really trade off. I'd be looking into a higher time frame to see if there's a higher time frame than 1 day to see if there's another divergence forming over through this price action here. But that was pivot point to there, boom. But because we weren't on oversold levels, nowhere near as much strength. So last time Bitcoin had a strong daily divergence was $25,000. And then previous one to that was right down here in the bottom of the bear market in oversold levels again. And from then on, we just ripped it. Maximum financial reward, least risk. This whole zone down here, maximum financial reward, least risk. We got some more. Don't particularly like the length of them, but then when you're in a significantly hard downtrend, you'll get a lot of them, but they're not too reliable because like the trend is like clearly hard down. You know, like 60,000 down to 30,000. That's half of its value lost. The last previous good daily divergences on BTC was also down here in July after our initial top in 21, around like March, May. That's a big divergence right there. I don't like going off the RSI's versions of them because it doesn't take into account a larger time frame of pivot points. But obviously we can't, you know, draw a pivot from like here to here because price has already traded massively upwards. That's way too large of a pivot point. So currently, considering I've been on that we are in a bull market, when you are trading above previous, you know, strong, large support levels, generally you will see the top of one of the candles in that wick, that range, act as a large sort of liquidity zone. And as you can see, when we had that Bank of Japan crash, we absolutely drilled it down, tapped pretty much dead onto that point, and then just reversed it. The amount of buyback pressure there, and I do not believe that this was, you know, probably a lot of people taking shorts, but this would have been like a ginormous spot purchase, just gobbled right back up. And we only drilled down so hard because one, the Bank of Japan, and two, as this divergence formed, I'll let everyone in here know, me and Kermit, we went, what was that?
Sorry, that was my bad.
Okay. When I spotted this, I'll let everyone know, me and Kermit went long. We got some longs in at about 44. I tried to get 54, 420, but it filled me $4 higher. Yeah. And because I had this divergence, I was confident that I can hold this for a while. So I positioned in here long. There was also one printed on Solana and Ethereum. So I positioned in right down here and low leverage, and I was able to hold that and swing that all the way up to these levels. This was where I started to sort of take some profit. I didn't take all the profit and I didn't close the entire position because I was hopeful, still very bullish, that, you know, maybe we continued off from there. So I ended up letting that run back down and tag me out of entry, but I'd already made good money. The low leverage let me take on little fees and funding over that time period. So everyone was giga bearish right in this period. They're all thinking $44,000, $40,000. I'm on the complete opposite side, and funding is just like super hard negative. As we're slowly grinding up, everyone's trying to short it. We got to like here, and everyone's betting on shorts, which with the divergence,
it's a
that's
perfect
strong buying pressure.
That's a perfect setup for dumb money.
Yes, because they're trying to short near the bottom. They're trying to short near the bottom of the current price action that's been developed. If there was no divergence there, I would be like, all right, yeah, I'm keen to get on a short here. But that shows, divergences show trend reversals, trend shifts, and on a daily time frame, that's a pretty strong, reliable sort of indication. So everyone started trying to short here, and I'm advising not to, or to like at least be careful. And I don't have any confidence whatsoever in attempting to take shorts after I get a large time frame divergence in price. Funding negative. People in the group here were trying to go short. People on Twitter trying to go short. My workmates are still thinking, oh, we go down much further. I was optimistic that maybe we get up to, you know, all-time highs, that we continue off the proper run from there.
Quick way.
And we proceeded to, you know, fiddle around, essentially just baiting in shorts. And then as we just kept pumping, they kept getting liquidated, which as a short is closed, it's treated as you've bought that asset because you're agreeing to sell it now and buy it back at a later later price, lower. So when a short gets liquidated, all that money is just bought back into the market, which just adds more fuel to the pump. Which is why when you got massively over leveraged longs up here, and people start getting liquidated and trying to long every dip, price can just drill so hard like we had here. It wasn't until we got around, I think it was 65,000 that some of the people in the group, Kermit actually attempted to take a short. I still wasn't game. And a couple of the boys got some decent shorts in here. And I was looking to get back in on a long. And I think I got back in on around 62, 62.3. Then once we did get up there, because I was still very bullish and I was taking entries into the lower time frame, I hadn't looked at the high time frame picture yet. We created a divergence right here, signaling a trend shift back downwards. Weaker, but up around this point, funding was starting to get like 0.05%. Like we were massively over leveraged on long positions. So when that Bank of Japan news came out, on top of the fact that we had massive leverage, I just started a ginormous capitulation event and liquidation event, which just absolutely drilled price down with complete ease. If you're a market maker, for instance, and you want to be buying off, you want to get a nice big dirty discounted scoop off this price level here from, you know, this range, that is a time where it's going to cost you significantly less money to drop price down there. Like you've, market maker, I've gone short here.
What? It just.
I've gone short right here, or I'm still short
Hey,
from up
Pascal,
here.
do you mind muting yourself?
It's going to cost me way less money to get price down to here, or even here, because that's the way the market makers and institutions think of it. They don't think of it as, oh, I want to take a short up here at 60, 68, 70,000, and then I hope price, you know, drops $2,000, $4,000. No, to them, they're already well positioned or selling off spot, taking profits on longs, entering into shorts. They use very advanced strategies of risk management. So where nearly absolutely every single position or trade that they take, they've hedged themselves in multiple different ways. They could be taking options at the same time. So to an institution or a market maker, to them it is not, oh, I hope Bitcoin drops $5,000 or $10,000. To them it is, how much money will it cost, will I have to spend to drop that down? How much is it going to cost me in dollars to move price or print a formation of price to drop price where I need it to go? Massively over leveraged on longs. Then we had the Bank of Japan news come out. So maybe it's going to cost them, I'll just throw out random numbers. Maybe it's going to cost them $1 billion or $2 billion or whatever to drop price on Bitcoin down to like here. And maybe there's $3 billion in liquidations that they can take out here because we're just over leveraged to the absolute tits. So they spend $1 billion and then they get $3.5 billion, $4 billion of liquidity, which then they can use to take further profits on coins that they've accumulated previously, or take profits on their shorts without impacting price there, so they get a nice good average. And currently Bitcoin, ever since our top up here, it's better drawn on the weekly time frame than daily. Roughly resembles a bull flag. Period of downwards consolidation. This is usually a continuation pattern. Broadening wedge, bull flag, you formations don't need to be absolutely perfect. Lower time frames, they matter more. Larger time frames, there's a lot of room for, error. So we've just been like consolidating down through this point, and on-chain metrics show that people who have held Bitcoin for 365 days or longer, they started selling their Bitcoin up into this section here. As we go on from like here all the way up to here, they were distributing their holdings. You could see the on-chain data of people who bought Bitcoin within 155 days till as we got up here, you're starting to watch long-term holders' total supply share of BTC held. And this is also people with like 1,000 or more Bitcoin. Their percentage share of supply being held is decreasing, while short-term buyers, short-term holders, which is 155 days that since they've last bought Bitcoin or whatever, or first bought Bitcoin, their supply share of Bitcoin is increasing. So that means they're taking profits. These are, long-term game players. They're taking profits, while all the, we'll just say retail is starting to buy up Bitcoin here, because they'll probably down here, they're like, oh, it's gonna go more, because their psychology is vastly different. A good example of that, my workmates in 21, they'd bought Bitcoin in 2017, been bag holding since then. All right, 2021, they start buying up, not really Bitcoin, but altcoins and whatnot, while we're at valuations of like $50,000 and $60,000. And then as we started to collapse, I watched them buy, a bit of Bitcoin at, $50,000, bought some more, $45,000. Then as soon as we hit like 40,000, 43,000, they just couldn't buy anymore. Even when we got down to here at $30,000, they couldn't buy any more Bitcoin, because they've either overinvested too much money, they haven't taken any profits, and to them psychologically, they're at like a point of like, oh, I'm down big. I've lost so much more money. I shouldn't put any more money in. I don't want to be buying it here and then it comes down even further. I don't want to buy it here in case it comes down even further, because their mind is just, it's not on I'm going to make money, it's I'm just going to keep losing money. It was very interesting to watch the psychology. You can buy it here, at 45, 50,000. But then like once we got around to like $43,000, they couldn't bring themselves to purchase any more whatsoever, which is an interesting concept, because like if you're willing to put money into, Bitcoin and buy when it's at 54,000, 55,000, 60,000, what stops you from buying it at 30,000?
Yeah, no, I don't think it's a good
Because
concept. What you want to do is dollar cost average. You want to bite into the dip.
But that's the short-term holder mindset, and generally they have less money than the long-term buyers, because
what they see is
their
the
influence.
loss. I think
Yes.
Yeah.
Yes, they see the immediate loss, not looking, oh, but what's it going to be valued at in another 5 years, or another 2 years, or whatever? What's it going to be valued at around the next bull run? They don't think like that. They're just currently thinking, because they're buying it up here and they haven't sold it, and they don't want to sell it now. They don't want to sell it here because, like, oh, it could still come back up.
Well,
and then it gets down further, and when you start getting to the point of, oh fuck, maybe I should sell it.
Here's the issue that is happening. These people are not familiar with any technical analysis, and they're probably hype, like dare I call them traders?
Yes.
You know what I mean? They get in at the apex of when the market's there
Yes.
because the news is out there.
Yeah.
We want to avoid that, and that's why we're trying to
They-
teach technical analysis so people can look at the charts and see like levels to essentially make plays off of, even on spot.
Yep. Yep. Most of them you'll find that they will never buy down in the bear market. They'll probably have completely forgotten about Bitcoin, haven't even thought about it.
They
or
might have
anything
even
like that.
over leveraged, and so
Until-
all their assets are in when they bought in high, so they don't have any more money to throw into it.
Yep. And they generally won't be starting buying again until everything started running up hard. Because by then news comes back out, and you got the Wall Street psychology cheat sheet, you know. Fucking
Fear, euphoria.
we got, I can't even remember what this one is, but like I think, you know, fear or whatever. Oh, fear, further losses, and then you get to here and it's like, oh no, this is, you're in a stage of what is it, disbelief first. Oh, this is a fake pump, this is a fake rally, and then you get up here and you get like your first bit of pullback or whatever, and you're like, ha, see, I knew it. And then you rally again, and when they're like getting up here and we're like, oh geez, maybe this is actually it, and then around this point you start getting more public news come out that, like, unless you're into crypto and you're searching stuff on your phone, whatever, you're not going to be getting targeted news adverts for it until they start bringing out, you know, mainstream media news.
Mhm.
And when they start jumping back in and buying it up, and my workmates did this as well. They started buying around like here. They were putting more money in there up here. Not as much as they used to have because they're still down pretty big from the previous cycle. So long-term holders have started to sell out some of their coins, take some of their profits, and short-term holders have all of a sudden stepped back in and they're holding larger and larger amounts of supply. And then it was around May, June that we seen the longer-term holders slowly start to increase their supply held again. They finished, the majority had finished distributing some of their profits, some of locking in some of their profits, and long-term holders had held more. And then as we started to like fiddle down through here, short-term holders had started to, because, oh well, it's not going up right now, oh fuck, everyone's thinking we're going to 40k, 44k. So they start selling off their coins in fear of further losses and capitulating. Meanwhile, addresses with 1,000 or more Bitcoin have started accumulating once again, and aggressively accumulating. In August, there was about 285,000 Bitcoin added to wallets that have 1,000 or more Bitcoin. As well as at the same time during this period here, like right to here, in that 35 days, probably take it back a bit longer because I can't remember the exact time. When I was looking at the sheet, the supply of Bitcoin sitting on exchanges was reaching significant lows, which means that there's like very little Bitcoin sitting on exchanges for actively trading. So like if you wanted to dump all of your Bitcoin, first you got to send it all over to the exchange. So people were buying it up, withdrawing it out to their personal wallets for longer term storage. And the levels were hitting, the low supply on exchanges was hitting levels around here.
I remember
and
that.
back
Yeah.
in 2017, you know, like around here. That's how low of a supply on Bitcoin exchanges that Bitcoin was. So like, long-term boys take profits. Short-term retailers, hype traders, can't even call the majority of them traders because honestly mostly don't trade, they just buy. They buy it when it starts pumping. Big boys taking profits, selling off into the newcomers, the uneducated. And then the retailers start selling out for losses, not every single one of them, but you know, they start taking out, selling off their Bitcoin, taking losses. Big boys are accumulating it back up. Supply on exchanges is decreasing massively. Right here, when I had that divergence forming, everyone was in also extra fear mode because we had, oh, Germany's selling, you know, this amount of Bitcoin, which was still a very relatively low amount of supply. That was like an extra bit of fear-driven news that had people panicking and added confluence to their bias of we're going to $40,000. And I was on the complete opposite side. I'm thinking I'm a market maker, I'm an institution. I need a lot of people to be selling their Bitcoin in large amounts, either in liquidations or fear at low prices for me to enter my positions or purchase the amount that I want without just impacting price. You know, like if they tried to hit market buy and, you know, they want to enter like $5 billion worth of Bitcoin, I'm gonna get a pretty fucking big pump candle off that, and then everyone's gonna try and short it, and they're gonna ruin their average entry, reducing their profits. So when everyone's panicking because Germany's gonna be selling Bitcoin and whatnot, that's adding extra bias to their confluence of, oh, we're going all the way down here. And then we also had Mount Gox news coming out again. And I say again because every single Bitcoin cycle in a bull run, there is Mount Gox always mentioned and start popping up in the news for some reason. And every single time I watch groups and Twitter get afraid. They're like, oh no, Mount Gox. Oh, they've been saying that to us for years and nothing's happened off it. Oh no, panic. So that was like an extra signal that had me bullish, was the Germany selling off, I think, say $3 billion worth of Bitcoin. That's a ton of liquidity for big boys to be buying up, entering their positions. That's a lot of sell pressure that they can just absorb and jump in right there at like, you know, like one price point or whatever. So now they're in. And then, you know, price rocketed off. So I'll get back to currently. We still have massive amount of fear in the market. Everyone flipped pretty damn bullish up here. Some was still hesitant and wary, but everyone was like super bullish up around this point. We got an absolutely beautiful tap into like 70,000, like dead on. And then just started like drilling it down. New York led the charge. Then we had the whole Bank of Japan carry trading stuff. Stock market taking a decline. That gave us great capitulation and liquidations off all the over leveraged people. All the extreme fear and news. We've seen some significant capitulation, which just helped drive price down. We had a pretty sort of decent run off here. I didn't really have any indication other than this massive buyback to be taking a trade on the daily time frame, like a longer term sort of trade. I didn't have my signals for really good confluence. I mean, we could have gone, was 28.23, 26.68. Yeah, I didn't have a RSI divergence formed here. Price made a lower low, but from this peak, well, this low on RSI, 28.23 valuation, and This one was 26.68. So I had no strong signal on the daily time frame to be jumping into a hefty position. Certain there was one on the 4 hour. So this whole time we're still in extreme fear. Extreme fear. And we came down, we made another double bottom. When was it? Was it the 11th of? Was it? Yeah, I think it was this candle here, the 11th, when we had CPI reports coming out. CPI apparently was bad month on month, and that's kind of added extra fuel to sort of the fear, because people were hoping for a 50 basis points cut on interest rates, and I honestly don't think that interest rates are going to have too much of a significant impact on Bitcoin's price, negative or bullish, other than like the initial reaction.
I'd slightly disagree with that.
It will, but I don't think it's going to have as like a reaction of, okay, yeah, cycle's over and done is more what I mean.
Let me explain to you why the pushback's there. I think that when interest rates go down, it makes money cheaper for people to borrow, and so they end up leveraging their assets at a lower interest rate to conduct these trades and purchase these assets. When interest rates go up, the money's not cheaper, so they don't do that. That's why a lot of these traders ran to Japan, because they had 0% interest on the yen, and they finished that up, and that's why we had that big drop in the candle. So even a market as small as Japan, if there's free money based on interest rates, the traders are going to use that internationally. So I think that's why it matters.
It does, but I don't think it is like the end all be all kind of situation.
I mean, you're right. They gobbled the price back up as soon as it dropped, but
I mean, it was a beautiful drop. Yeah, I spotted this large daily divergence. Price made a double bottom, and so like if price makes a double bottom and RSI makes a divergence, is seen as a bit weaker in strength, for instance.
What is that? A hidden bull dip?
No, this is still just a divergence. Price can make a double bottom and the RSI can give you a divergence, but it's generally seen as a bit weaker than if price declined and made a new low, and then we got this printed as well. That would have been a very much stronger sort of indication. But the fact that this is so large, like this is over an entire month's worth of price action, that had me quite bullish, and I re-got my TradingView subscription yesterday so I can have a look into some timeframes other than 1 day. So we'll go into the 3-day now. Alright, so on the 3-day, we are looking at, we have a bullish divergence on the 3-day. We formed one here, double bottom. RSI did make a divergence, but if we drag that over off this new low that we have created, we actually have a larger spanning bullish divergence with price making a lower low. We haven't had a 3-day bullish divergence on Bitcoin for a very long time. And considering that we are in a bull market, on the 3-day time frame, drop this out. Let's look for some hidden bullish divergences for continuation. and sure, get rid of that. So hidden bullish divergence, you need to have price swings. So it can't just be drop into the 15-minute, and I'll give an example. Actually, where's that gold? What was it? Yeah, there. Yesterday, was it gold futures? So you want like significant swing points. So you could say this was one. It was our first sort of pullback. I would probably more likely actually go there. But through this whole point, like you can't class this as a swing or a pivot point because the deviation in price, like where are your swing lows and where are your swing highs? Or your high highs and high, god damn it, your high highs and high lows. So there is a swing, and then we get a decent sort of pullback there. No, wouldn't even go there. Now we're looking like we're heading down a little bit there. So these are our swings, our pivot points. So a hidden bullish divergence, here's our swing. So we're going to be looking at this level right here, this RSI. When we get our next swing point on the low side, right here. So like, we could have had one here, but divergences, regular and hidden, can be broken. Hidden get broken more often, because it's, because if you're printing hidden divergences, you're also going to be very likely printing bearish divergences, and depending on like what kind of point of interest that you're in, how strong the trend is, or if you've been trending for quite a while, that maybe the trend can lose strength. I generally like to say like 14 to 25 sort of candles per the time frame of the trend signal that you've gotten given. So like we could have drawn pivot from here to here, which I did originally do yesterday, but I didn't really like it because I drew it here, but I was watching this and I'm like, we could still come down, and then that's broken. We've just broken that one. So, and the swing in price was not significant enough. The stronger the swing in price, the more defined, the better. So we will delete that. We'll go from our pivot here to here. So if we took one off here, we would have actually got some initial, we would have actually got an initial long and made some profit. But we pretty much instantly started following with like some congestion, some tight trading consolidation or whatever. This is, you'd think of this as congestion. The signal is not too strong or too great if you try to take a pivot off here, but RSI didn't make it low. Pretty much touched right on it. Bad signal. I wouldn't have ever taken one there. So original pivot from here. You could have drawn one here, as like, say, like you're watching price action here. None of this has taken place, and you see, you get this bounce. You could have taken a trade there, and you would have made some money. But the deviation in price for the swing point, to me, wasn't significant enough. So maybe I was greedy, took a trade here, tried to get in on the absolute monstrous trend that gold is on. And then that divergence would have basically broken, and you would need to be looking at redrawing it on the next bottom of swing price and bottom of the RSI, which gives us that. And then once that confirmed on the the next 1 hour close, we had a pretty significant move upwards there. And you know what? It does look like that we are actually soon to make another divergence there on the RSI. Pretty interesting. Gold's just, I don't even know why gold's just gone so hard, but so
It's because the greater market's fucking crashing. That's why I'm so bearish.
safe
Bitcoin
haven.
might work inversely towards the market trend because it's essentially a asset that retains its value. There's another term for it, but there's the U.S. There's fucking entire chains that are closing hundreds of stores, like, and it's not. They keep saying that we're not in a recession because we haven't had 2 quarters or 2 years of negative numbers, and I'm like, we have.
It was back in like last year, 2024 now. Pretty sure it was even 2022. Bloody, one of the. I'm gonna have a cigarette. I'm gonna still keep talking. I'll be back on the chart in a sec, guys. By the way, you're more than welcome to ask questions. I have ADHD, so I can sort of ramble on and sidetrack myself.
Well, we should call this session relatively soon. We usually only go for an hour, so we could call the live stream and then you can continue after, just for members only, if that works best for you.
Yeah, I'm more than happy to do that.
That way it's a little bit more exclusive. Yeah, it's I'm super bearish on the market, like just standalone. The U.S. market specifically. We've had bad fiscal policy, and we're getting to an event horizon here very soon where our debt, our money, is going to far exceed our ability to pay it back.
It always is. I don't think the way I was somewhat thinking about it, and like I generally I think about it in the same terms that other financial people that understand to a degree about like the economics and whatnot around all this stuff. But then I also like to think on scenarios where it's slightly different than the way that other people would be perceiving it, because that's always done me great justice in crypto, for instance. And when COVID time was around, honestly, it just feels like the world is just this massive infinite borrowing machine, constantly borrowing money
fake.
off each
it's
other.
A facade. That's what I'm sensing, is that because it's the Hollywood liberal economic order, where if you go to LA, you go to Hollywood, you get this image that's displayed on the television of this beautiful utopia of California. But if you actually go to the city and look around everywhere but Beverly Hills, it's a fucking shithole. Like it's terrible.
Yeah. We got the same thing in Australia. I think it's like pretty much every single place in the world.
Every major city
on TV. Yeah.
Yeah. So
like in Australia, Brisbane is shown to be a very nice, beautiful city. You actually go in there, You got homeless people, like they never show any of that on TV aside
Oh.
from Australian TV local news,
Yep.
and that's very little. But you got homeless people in the streets, you know, at night time. You've got we call them eshays, these young hooligan, you know, like drug kids, you know, like the riffraff or whatever. They're always wearing like
The
Nike,
Australian
Adidas,
champs.
you know. Yeah, yes. Nike, Adidas, you know, they're selling drugs. So many of them do methamphetamine. Methamphetamine is a huge problem in Australia, way more than anything else. And you can just be walking down the street. Like one time, back in like 2017 or whatever, when I was dating this chick in the past, we went out to a concert in one of the clubs. As we were like leaving, we went to go get some McDonald's in like it's called the Queen Street Mall strip. It's like it's like basically this plus sign, and just as you're walking up through the plus sign on the map, you got shops lined all the way along. You know, shopping stock, clothes, whatnot, and then you got all food places. It's generally a pretty busy area, weekends, clubbing sort of time frame. Walking along there with my partner at the time, and this dude's like coming past us or whatever, him and his mate. He's got, you know, tats on his neck, tall, skinny bloke. He looks like he does methamphetamine, you know, he looks like he thinks he's like the hardest motherfucker on earth. And as he's walking by, he bumps my shoulder. And all I did was turn around and say, "Hey man, just watch where you're going," and started to move on. And he turned around and he just started to try to start something. He just wanted to go. And he got up in my face and whatnot. Everyone around's just like pulling out their phones, starting to record. And you know, I went to say something, and he just headbutts me.
And so
Go
you're
to the
saying that
service
there's a
station.
video of you out there on World Star.
Oh yeah, most definitely, most definitely. Go to the service station or something like that, 2 o'clock in the morning, you know, 11 o'clock at night. You got some crackhead asking you for a smoke or for a couple dollars, and if you're like on the other side of the road and like you look over and they look at you at the same time and like you kind of like lock eyes for 1 second, as soon as you break that eye contact, they're like, "Oh no, this guy wants to go," and they're like, "Oi, you got a problem?" You know, and they just start something.
It's not even at night
mental.
anymore. It's like it's full on daytime. Like
Yeah, it is even full on daytime.
yeah, like it's gotten like out of fucking control. Like for me, in my area, there was like a bunch of celebrations that were essentially canceled because of fucking stupid people doing stupid things. And it's not the only one. It's like a series of these events that happens where it's like the whole city shuts down. And I'm like, you know, why isn't it in the newspaper? What, like, this should be national media.
Yeah.
And they just keep burying. All right, well, let's call the live stream here, but yeah, let's continue the discussion off.
I'll
Stream.
continue on with the for the members in here.
Yeah, everybody who's watching live, thanks for joining us. Go to www.cartoonmoneyprinters.com. Come join the team. If you sign up through the $25 a month, you can get 90 days free access to come try us out. Let us know what you think. We have our own custom indicators. We have a good community. We have some signals, some call outs, things like that. Come try us